Assalamualaikum. Welcome to my YouTube channel. I hope you are doing well. Let's start our today's lecture. In this lecture, we are going to discuss consignment account, consignee and consigner, why we need consignment accounting, difference between consignment and sales, and then we will solve an example. Let's begin. What is consignment? Consignment refers to a business model which the owner sends the goods to a third party for the purpose of selling. In short, the owner expands his business by sending goods to other people for selling so that maximum goods can be sold. So let's read the definition. Consignment refers to a business agreement where goods are sent by one party, the consignor, to another party, the consignee, for the purpose of selling those goods. Now we have seen some new terms, that is consignor and consignee. The consignor is the owner of goods who sends the goods to other party for the purpose of selling so that the other party can sell these goods on his behalf. We have the term consignee. The consignee is a sales agent or a third party that takes the responsibility of selling the goods on the behalf of the consignor, and in return he charges commission to the owner. So you can read the definition from here. I have also taken a diagram for your understanding. The consignor sends goods for sale to the consignee. The consignee sells the goods on behalf of consignor for commission. I hope you understood. Let's see some key points of consignment. Ownership. While doing consignment, the ownership is not transferred to the consignee. Ownership remains for the consignor until they are sold to a third party. Then recording transactions. The consignor does not record the goods sent to the consignee as a sale. Instead, the consignor maintains the goods in their inventory until a sale is made by the consignee. By this, we come to know that the consignor does not record that those goods are sent to the consignee as a sale. Ownership remains for the consignor until they are sold to a third party. Then recording transactions. The consignor does not record the goods sent to the consignee as a sale. Instead, the consignor maintains the goods in their inventory until a sale is made by the consignee. From this, we come to know that consignment is not a sale and is not recorded as a sale. Then we have revenue recognition. The consignee recognizes revenue only when the goods are sold to the end customer. So revenue is generated only when goods are sold to end customer, and the consignor recognizes revenue upon the sale to the end customer as well. So the consignor is aware of the sale to the customer. Then what is the relationship between the consignor and consignee is of boss and employee, or we can say that principal and agent. The boss is the owner of company while employee is providing services to the company. What happens with the unsold goods? These goods are returned and these goods are returned to the consignor and can be used in the new accounting period. These goods are returned to the consignor or they can be sold with the new agreement. Then what is the risk and reward? The risk is taken by the consignor and till the selling of goods. Now let's see why we need consignment. The businessmen need consignment for the following purposes: market expansion, risk mitigation, flexibility for consignor, local presence, cost savings for consignee. Market expansion is means that they expand their business to different locations and reach new markets so that their products can be sold more so that goods can be sold as soon as possible without a physical presence. Risk mitigation: by placing goods on consignment, the consignor retains ownership until they are sold. So, the financial risk of holding unsold inventory is reduced. Flexibility for consignor: as we know, consignor is the owner of goods. He can test different markets without facing too much financial crisis. Local presence: for consignors, it is difficult to present at every location. For consignors, it is difficult to be present on different locations for expanding their market, so they hire consignees so that they can act as local representative, providing a physical location for customers to buy the products. Cost savings for consignee: moreover, it also helps consignees that if they want to start a business, they can take goods from the take they can take the responsibility of selling goods for the consignor, and in this way they can test the market and also can start a business without a financial burden of purchasing inventory upfront. Now let's see what is the difference between consignment and sales. As I told you earlier, consignment is sending goods to the consignee so that he can sell the products on the behalf of the consignor. What is sales? Sales is directly a regular sale and purchase matter. Now let's see the difference. Consignment: two parties are involved in consignment, that are consignee and consignor. While in sales, the two parties that are involved are seller and buyer. In consignment, ownership is not transferred to the third party or consignee, while in sales, ownership is transferred to the buyer. In consignment, the consignee is given a commission for selling goods, while in sale, the seller does not give any commission to buyer, and moreover, he takes money from the customer for buying the product. Example of consignment can be a store that sells goods owned by another party, reducing the source upfront financial risk as he does not have to buy inventory. While in sales, a store buys its own inventory and sells the products. Let's move to next slide. Before recording journal entries, we must know the accounts for consignor and accounts for consignee. Separate accounts are made for consignor and consignee. Four accounts are made for consignor. These are consignment account, which is a nominal account for tracking profit and loss or any income. Then goods sent on consignment, it is a real account. Real account is account which is for actual goods or products. While we have Then we have consignee's account, which is a personal account. Basically, it belongs to a person. Then we have stock on consignment account. That is a real account. Account for goods, actual goods or products is termed as real account. Then we have account for consignee. Two accounts are made as he have to deal with the consignor and the commission only. We have consignor account. Bas it will be a personal account, and commission account, as the name suggests, it is an income, so it will be a nominal account which is used to record an income. Thank you. Don't forget to subscribe, like, share and comment.